Hi, Paul from Gann Exchange here. On the screen we've got a chart of the S&P 500 and might look a little confusing at first, but what you're looking at here is a Gann fan. We're looking at Gann dynamic support and resistance lines, and then those circles are Gann cycles, Gann fixed cycles. Gann fixed cycles do have limitations, but if you have a look, they've been reasonably accurate for the last few months. Now, we did point to a possible low at the beginning of the month on the S&P 500, round about the 3200 area, and you can see round about this cycle the index did find some sort of a low at 3224. We've had a rally over the last week or so, and in the short term we're coming up to a little bit of resistance in terms of time. You can see on the chart as well we did hit a little bit of resistance in terms of price as well. So we've been expecting a pullback in the short term, but we don't feel that this is the ultimate high. We do think we're going to push at least one level higher. Next resistance levels come in round about 38.40 to 39, so we will be watching that. And the next cycles to look out for are round about the 20th of November and then beginning of December. So this market's moving quite quickly. We just need to see how this all plays out in the short term. But from our point of view, markets are still looking reasonably good, and one should just track to see how this plays out going into the end of the year. The speed of it has us a little bit concerned. We were expecting major cycles or major market tops, should I say rather, beginning of next year. The way things are moving, it's looking as though it's going to play out a little bit quicker than that. So one should start to be vigilant probably from around about December onwards. For now though, we have hit possibly a short-term high. Look for a short-term pullback, but ultimately go a little bit higher. We actually had the buy in our newsletter, and if you'd like to see more of what we have in the newsletter, please look out for us. It's www.gannexchange.com. Thanks all.